This is Charlie Gasparino and Bob Sloan with another riveting edition of Risk and Return. Sorry for the voice. I talk too much for a living, as you could tell. And as my wife would admit, I talk too much all the time. But that's kind of what we do here in Risk and Return. We talk and we help you navigate the markets. My partner, Bob Sloan, has, again, some amazing picks, some actionable items, which we're going to hit right off the top.
By the way, just before we get to the actionable ideas, how about our interview with Jim Chanos and the pickup that's received and how incredible that's been?
Yeah, I mean, it literally lit a spark in the market. I mean, it literally sparked a number of debates about the notion of short selling right now, which is very controversial, as you know, Bob. I mean, there was an attempt to ban it. At least they talked about it. Jim, as you know, is the guru of short selling, the guy that's uncovered more frauds than probably the SEC ever has. And Jim's in the middle of it still. He's still kicking, still doing it. He's taking his lumps on things like Tesla. But again, there is a reason why you could short a stock. That information is something that you as an investor should take into account. And the companies that get shorted probably should bring Jim Chanos in there. I think Elon Musk would have done himself a great service if he had a meeting with Jim Chanos. What exactly do you see wrong with my company?
Uh, you know, it's an
It
interesting
probably
thing, right?
it would have saved him a lot of stuff, right?
Well, one of the things we didn't ask Jim, which I think maybe you can ask our guest later, which is Marc Cohodes, and he's going to talk about everything pot, is
Right.
what it is in the makeup of someone that short stocks for a living. They come in every day and they get punched in the face.
Yeah.
They
Now,
only
Mark,
write
we
like
should point out, was a legendary short seller,
he
and we'll
was.
get into it. And he's taken his lumps too, and he's come back. He's now big into medical marijuana. It came after an injury that he had, and I'm going to let Mark unpack it. But yes, we got pick up not just on the notion of short selling, but Jim's call on Bitcoin and MicroStrategy.
Yep. And
How he's handling both the short. I guess he's long Bitcoin, short MicroStrategy. Why that elicited a major debate. So Bloomberg, we should point out, has a write up on this. I linked to it. So if you want to see the whole debate on MicroStrategy in particular and the quote of risk and return, go to my go to my page or Bob's page, because we both put it up on Twitter, or on X, we should call it now.
on
I still
X.
can't say X, but it's my default is always Twitter, but it is X. Bob, let's get to your actionable items because we have a packed show today. Go for it.
Sure. So last week, if you look at our cumulative picks and just wins and losses, Dollar General was a big winner. It was up 16% in one day, and our signal was very strong. We said that. Campbell was in a wash, was neutral, and Credo was a loser, but that was only down a couple of percent, about 3 or 4%. So cumulatively, way up on the week. And for next week, we have a very strong signal on Oracle, which releases earnings on Tuesday. And one of the things on the scorecard you can see, we're equally weighting winners and losers, and that's obviously not the way you keep score in in your portfolio. You look at how well is the portfolio done, not how many winners or losers.
Right.
But if you looked at our stock selections and annualized the return, you double your money, or more than double your money over time. Now, remember, this is a back test. We back test these returns over time, and we've seen tremendous results. That's why we're making these actual live picks. It's not investment advice. It's just what our model says. We're not predicting a price point, or we're not telling you when to buy or what to buy. But we're saying this is what the data says, and this is a signal. And if you'd obeyed that signal in a disciplined way, you'd make a lot of money. And that's why we're on this show. We're talking about actionable ideas because that's what our audience wants to see.
How many more do we have?
Well, that's the thing, right? So we're not trying to do We only do this when we see a signal that's strong. And the thing is, we cannot forecast it 2 or 3 weeks before. We have to wait until a couple of days before earnings because we need a time series that's complete for us to actually make the forecast. So Thursday's a good day because, as you know, Charlie, that's when most of the earnings comes out is on a Thursday. And that's why we do this show on a Thursday because it gives us the greatest chance to actually provide actionable ideas. And Oracle just happens to be one. If we had more than one, we would give you five. But this week we have one.
And by the way, Oracle is in the news because just a little bit of non-tradable activity. The TikTok ban, which we're going to get into later, is going to be delayed again because Trump wants to save TikTok. I mean, at least that's what we're hearing. He's leaning towards extending the doing another executive order that extends its operation so we can essentially not ban TikTok, have a U.S. company buy it. It's all caught up in the U.S. China trade deliberations. TikTok is run by a Chinese company. Oracle, we should point out, will be the probably the main investor. It'll be the company that does the cloud. So, it's a little bit of an issue. If that deal ever gets done, that could be a push on Oracle stock. Just it could be. I don't tell people what it does. You never know, but it is a net
Well,
positive for Oracle.
sure. And it is interesting that we're seeing a bullish signal coming up to its earnings release next Tuesday.
Yeah, that's fascinating. That's fascinating. Anything else you want to hit on today?
No, back over to you, Charlie. I think you have a lot to say, so let's unpack that.
Again, the TikTok story to me is fascinating. Trump started as a TikTok hater, right? He wanted to ban it back in 2020. I covered it. I broke the story back in 2020 that Microsoft was actually going to buy it, and then the deal fell through because the Chinese didn't want to sell totally, and it went back and forth. During the Biden years, there was a bipartisan push to ban it. They signed it into law. This is Republicans and Democrats overwhelmingly believe that TikTok is a tool for the Chinese to spy on the youth, or at least very bad for America's youth because it
Right.
hooks them on stupid stuff. And aside from with people, the Chinese have it's a Chinese-based company, ByteDance. The Chinese block a lot of the stupid stuff. Their kids will see the videos that talk about math and reading and history, and pro-China propaganda. Our kids get all the garbage on top of that. So, and our kids feast on the garbage. So there's that. There's the thing where they allegedly spy because the Chinese government controls most Chinese companies. ByteDance vehemently denies it, sued to try to get the Supreme Court to block the legislation. The Supreme Court affirmed the legislation. Then in comes Trump, and something interesting happens. He thinks that TikTok helped him get elected in 2024.
Right.
And since then, he's been trying to save it. And through some sort of a private sector deal where the U.S. investors would kind of own the U.S. part of it, majority owned. ByteDance would still have a minority part. They would keep the rest of TikTok, which is global and big. At least that's where we were heading. And then we went to trade war and everything stopped. And so this thing has been operating, still operating on 90-day or 75-day extensions, executive orders from the president, which is highly controversial. People say that's not even legal. But what I'm hearing is that he's going to do it. He's likely to do it again, unless he sees some strategic advantage in letting it go dark. But I don't, the theory is he doesn't really right now. So there's an 80% chance he's going to extend it. Congress is so wrapped up in the budget and all this stuff and the trade and the bigger issues involving trade with China that you might not hear that much pushback from the Chinese, from like even pro and the China hawks in Congress, like Rick Scott of Florida, Tom Cotton of Arkansas. So that's what I'm hearing. Obviously, day to day, story developing, situation fluid, but that's one thing that I've been reporting on. The bond market vigilantes also are looking at a weird thing. There's something called the Treasury. This is a weird, I never knew this. Something called the Treasury General Account. Have you ever heard of this, Bob?
No, not until you wrote about it.
Okay, so it literally is a a checking account that the Treasury uses to pay for stuff on a short-term basis. Like Bob Sloan doesn't have all the money that he needs to pay his vendors and everything, right? So you tap into short-term lending, or you have a rainy day fund that you try to tap. And um, the federal government has this. It's usually about $800 billion. Janet Yellen drew it down dramatically over time. Trump administration has been drawing it down dramatically because we're at a budget impasse and we have a debt ceiling. And what these bond market people say, and it's Bear Traps report, a guy named Robert Van Brattenberg and Larry McDonald, smart guys that cover the markets, the bond market in particular, which I believe in many ways is the most important market given its indicators of the
No
economy.
doubt.
They're saying like, you could see in the summer, okay, debt ceiling's done, big budget, big beautiful budget done. You got to replenish this. So I asked, why do you have to replenish it? Why don't you just like keep doing? Well, it could be a sign in the market that you don't have them, you can't replenish it.
No.
That's a de facto default, right? That could be. And so they got to replenish it. And when they replenish it, we're talking about a significant amount of borrowing that goes into that on top of what they already have to do. So, watch it. It could be very interesting. It could cause a spike in interest rates. Go ahead. I'm sorry.
So, that could very well be why you see so much jawboning of the Fed right now, right? I mean, the administration has been very much all over Powell to cut rates. I call Trump a one-man VIX
Yeah,
because he absolutely causes so much volatility in everything that he touches, right? And you look at yields on the bond market, no different.
right,
You look at volatility in stocks, ticking up. So everything that he touches is volatile and creates volatility, which is fantastic for stock traders. It's fantastic for Wall
right.
Street floors.
It's
It's
great for
fantastic.
us. We have stuff to talk about
We have
constantly.
things that media has things to talk about. People need data, but the ADP number came out and was very weak. Right? So
Yeah,
Trump, President Trump's has been jawboning Powell to say, what more do you need to know? Cut rates right now.
yeah. I mean, listen, we don't know. I think we're going to get into this in my next thing, which we'll unpack. But we don't know what we don't know. So I mean, a lot of these numbers are backward looking in terms of inflation. And
Right.
Trump would say we have low inflation, but it's backward looking. We haven't seen the impact of the tariffs fully in the numbers. The other thing we should point out is not only is he jawboning the Fed, Bessent is reaching out to banks and thinking of getting some demand for the banks for treasuries by boosting their capital levels and
Right.
using treasuries. So that would be a source of funding for some of the stuff they need to do.
Sure. So if you risk weight treasuries to zero, which I actually thought that had already been done, but I guess not. If you risk weight, meaning how much capital a bank has to put against owning that position, if you risk weight
Right.
it to zero, it's not a balance sheet. It may be a balance sheet item, but it's not a capital item that frees up gunpowder, dry powder to participate in the treasury
Treasury
auction.
auction. Yeah.
Yep.
And that's what he's hoping. Then let's get to my last item because this, Bob, I think you have data on this, which is fascinating. Okay. I mean, the markets right now are pretty stable, right? Even when we get a bad number, we hear, even when Trump says, 50% tariffs on aluminum, we still, the market, you look at the screen, it's green or
Yeah.
largely green, right? We're not seeing the tantrum that we had early on. I mean, there's that whole taco trade. What does taco mean again? I forgot, but
Trump always
Trump
chickens out, right? So,
Trump always chickens out. That's it, right. So I mean, and he's not really though. That's the problem.
no.
And so there are baseline tariffs here, and there is this, and there is that, and there is a very tough and sometimes acrimonious discussion with the Chinese.
Yes.
Trump goes from one day saying he loves it, Xi, next day saying he's too tough and blah blah blah. They're screwing us, and no, he loves them. So I mean, this is high level stuff, and the markets are just brushing it off. So when I'm talking to people, I'm saying, are we misreading this? And if we are misreading this, if those backward looking numbers, when they become forward, when you see the tariffs in the CPI and in GDP, when you see the impact here, are we in for a June, July, August surprise in the markets where they tank because they haven't taken into account fully what's going on here. And a lot of people remind me of what happened during the financial crisis. I covered it. I wrote a book on it. If you look at November 2007, markets were at all-time highs,
Yeah.
14,000 on the Dow. Granted, we're way beyond that. But it was pretty ebullient. I was on CNBC. I remember everybody's talking about, oh, it's fine. We're through the worst of it.
Right.
Credit crunch is going to be over. The Fed's going to lower rates. And then one thing after another that said, oh, this is even worse. You had the bond insurers, they blew up. You had some subprime lending blown up. Obviously, Bear Stearns. Then you have that fretful summer where Fannie and Freddie blew up. And then you had the big kahuna Lehman, which touched off the whole thing. And one of the things that I've been told is that the market being surprised because so much of Wall Street downplayed it factored into the wicked downdraft that we had, the drying up of credit. Everybody freaked. But we
Right.
didn't know about it. It was this bad, so we're not lending to anybody. And that I'm not saying, listen, we have a different banking system, much more capital. We talked about it, but you could see something along those lines, an August surprise, can't you?
Well, it's funny. So when we're looking at our data, it absolutely backs up the conversations you're having around Wall Street. So one of the things we've seen, if you look at the consumer discretionary, consumer staple, industrials, and you created a basket of the stocks that have the highest implied tariff rate, and we actually did that. So, for example, Kenvue Inc., which makes skincare products, they would have a blended tariff rate of about 45%. Clorox, a consumer staple company, they would have a blended tariff rate of about 35%. Church and Dwight, I mean, this is, shows you how far-ranging this is. They make condoms, right, amongst other things. They'd have an implied tariff of 31%. But it also goes to things like Palo Alto Networks, Goodyear, Steve Madden, shoes, Hasbro, obviously, Cracker Barrel, restaurant, um, Dollar Tree, et cetera. So a lot of stocks between 45% blended tariff rate and 20. And then the reason why we're talking about these tariff rates is because the short interest in all these stocks as a basket has gone up about 25% in the last 3 months. And why is that significant? It's because forward looking for 3 months, the smart money is saying, we think there's got to be a deterioration in earnings. Tariffs are a real thing. And we're going to increase our short bets against those companies that have, particularly in the consumer related, where there's a lot of supply chain dependent manufacturing, and you're relying on raw goods, et cetera. You're relying on trade to produce your products that are not information based or IP based. We're going to short that, and we're seeing that. So you see, you know, the overall short interest in those stocks rising from about 2 to 2.5%. Now, it doesn't sound like a lot, but these are very big market cap companies. That's a big move.
Big move. And so you're saying that that's where you're seeing this theory play out a little bit.
Yeah, and then there's another stock now, not in the U.S., which I think is a really fascinating story, which is Toyo Tire and Rubber. Right, Toyo is a leading manufacturer of SUV tires. And what they chose to do is actually eat the cost. So rather than raise their prices, which is some of their competitors did, they said, no, we have, big market share in the United States. We're going to hold on to that. And what's happened? What's happened is that the short interest has gone higher, but so has the stock price.
Interesting.
So, so it's a very fascinating case study because the company said, nope, we fought long and hard we're going to maintain our position and we're going to increase, we're going to eat the tariff,
We're going to eat the tariffs, as Trump would say, right?
eat the tariff to keep our margins. And the stock market's basically saying, we love that. But the short sellers are saying, you know, we don't think you can do that forever. Eventually, eventually, you're going to have to pass on the cost, and you're probably going to lose market share, and you're going to probably that'll deteriorate or erode
I
some of
mean,
your
that
margins.
is writ large what happened in the financial crisis. Literally, there were shorts. There was a movie called The Big Short,
Yep.
which left out some of the real short sellers in that whole drama, like Stan Druckenmiller, who was long time shorting subprime lenders and banks, and he just knew it. He saw Stan told me that he actually had a Bear Stearns analyst in 2006, 2007, 2006 explain why all the banks were impaired. And the guy said it was like he covered Stan, and the guy was like, laid it out. Here's why all the banks are impaired here. Um, and so you had people going long some of these stocks, particularly in the second half of 2007, after the initial credit crunch fears wore off, and it was more like Fed's going to raise lower rates and we're going to be saved. You had the other guy saying, "No, no, 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 this isn't enough." David Einhorn, you know, Stan Druckenmiller, the Goldman Sachs trading desk, which actually bet against itself. They
Yes.
went
Well,
short the
that's right. They
market.
had to head. But that is a very fascinating comment, Charlie, because the idea of a center risk book is key how Wall Street makes money. So just because Goldman Sachs, you may see on the filing, they're long or short something, there is an internal desk. Um, and this is at every firm, not just Goldman Sachs. And by the way, at most big hedge funds too. So, you know, the job of the center risk book is to watch the house's money
And
and
that's
make
what
sure.
our friend that yes, and that's what our friend Gary Cohn did. And Gary
That's
was
right.
leading that effort. And
That's right.
Gary, he saved the firm. And people don't give him enough credit for saving the firm. He was the guy behind. I mean, Lloyd Blankfein was the CEO. Gary ran it with him, but this was Gary's bailiwick. Seeing that risk, and
Right.
he stepped in, and it was just amazing. But my point, in a meta way, is like these are the comparisons. You know, will the shorts be wrong this time? Possibly. But remember, they got it. They're not often wrong when it comes to these big meta bets. And irrational exuberance occurs much more on the long side. We should point out that Jim Chanos was wrong on Tesla, right?
Yep.
But he may not be wrong long term, as we're
Well,
seeing the stock.
one of the things that came out in our interview with Jim was something really fascinating that he actually dropped on his X account. And I would keep an eye on it. We should have Ellie Tourette back on because it's be fascinating. He actually, it's an arcane thing. He actually reposted a, I guess on X you still call them tweets. You can't, there's no substitute for a tweet, right? So
Yeah,
he posted um, that Morgan Stanley used AI to rewrite a lot of their mainframe software, Cobalt. Now, I will tell you that seems like, well, what's the big deal? But an ATM runs on a software system that is very old. Your transactions and payments runs on software that's very old. I could go on, but a large majority of the financial economy runs on mainframe software. If in fact this is a true thing, and I believe it is, and they're able to rewrite Cobalt, this has implications way, way, way beyond. And the reason I mention this is because one of the things in the 90s was that, people worried about inflation, but we gained in efficiency and there was this offset.
right.
So perhaps, and it would be maybe by the marvel that is the free economy rather than by design, perhaps this is a canary in a coal mine for how information efficiency can offset some of the costs of tariffs.
Yeah, I mean,
And
as an
it's a
investor, you
big,
can
big,
protect
big,
you
big,
can
big,
protect
big
yourself.
deal. If that is correct, if that tweet is correct, it is a huge deal.
I
It
mean,
in very big companies.
offset the impact of tariffs from an investing standpoint is what we're talking about, right?
Well, it's tariffs are inflationary. If you have an inflationary offset in that you can make transactions cheaper, faster, and
Yeah.
you have it opens the door to tokenization. This is why I talked about Ellie, our first guest. It'd be fascinating to have her back and talk about this. We should keep an eye on this because
We will. Well,
tariffs are
AI
inflationary, but there's also things that work that could be offsets.
AI is a fascinating. Um, it is an efficiency driver. There's no doubt.
No
It
doubt.
helps me do my job. I don't listen. The last thing I'm going to do is have AI write something for me. That's the one thing it can't do. It's not a good writer. It's a horrible reporter, but the fine information, it's phenomenal.
I mean, what do you
And
think the AI version of Charlie Gasparino would
you
say?
don't want to
If
know.
we prompted something, we said, please say what Charlie Gasparino would
Well, I
say.
mean, that's the counter argument to inflation that we do have AI, but I just wonder whether it's enough. We have enough AI to stop, child seat prices from going up if we go to
Well,
trade
the
war,
bid
all out
ask
war.
on the bid ask on that, what I just said is trust.
Yeah,
People talk to you because they trust you, and
that's
that's
true too.
right.
The other thing I want to point out is I said Tesla, you can see it in the stock. Actually, you can't see it really in the stock. Although the stock is off its lows, stock is not. It's off its highs. It's off its lows as well. I think what Jim would say is that, you know, all the stuff that he pointed out that's wrong with the company is kind of happening. I mean, I'm reading here's a headline in the Post. Dozens of unsold Tesla Cybertrucks piled up in Michigan shopping center. I mean, you look at the sort of raw metric numbers on Tesla, and it's not blowing you away, right?
I got to tell
Especially
you
this
this,
last
Charlie.
quarter.
Decimus Meridius Maximus. Are you not entertained? Elon Musk won the crowd.
Yeah,
Period.
that's the whole thing.
He won the crowd.
Is the crowd value, worth, trading at 165 times a PE ratio of 165?
But this is why the market's climbing its wall of worry right now. We're worried about it. Your contacts are worried about it. Our data is worried about it. The crowd is buying the stocks.
All right. Well, what do they say about a market? Two sides make the market. That's what
Absolutely.
Jim always tells me that. One of the great things about Risk and Reward is that we do bring you the news, and there's a lot of news today breaking. And one of the best things about Marc Cohodes, a 43-year-old veteran investor, hedge fund maestro, knows a lot. He's now making a pivot somewhat in his career to the marijuana business, which we're going to get into. But he has the best perspective, one of the best perspectives I know on the investing business and in economics. Let's bring in Marc Cohodes. And Marc, the news of the day is this. I think I could say it. It's my podcast. This shit show between Elon Musk and Trump. It began with Musk criticizing the big, beautiful budget, and then it soon spiraled out of control in ways that, kind of odd. I mean, they're taking personal shots at each other. I mean, it's one thing to say that there's Musk didn't like the budget, but then he went, and then it got off the rails. Now Musk is talking about Trump and Epstein, and Trump is talking about taking away all of Musk's funding in his various projects. You remember Tesla gets EV credits, which are being zeroed out. Musk's not happy about that. But SpaceX does stuff for NASA. I mean, his other businesses rely on the government. Let me ask you this, just from a winner and loser standpoint, who has most to lose in this?
It's a poor look by everyone involved. And it used to be, when you and I were younger, it was one person, one vote. Now it looks like politics are all about money, and things can be bought. And Elon probably has his feelings hurt that he donated so much money and is now getting disrespected, and he probably thinks pissed on. So, it's what happens. But adults need to act like adults, and Trump is the president, and as they all say, he's what the American people voted for. He's what the American people wanted, and it is what it is. But it's a poor look. It's a poor reflection of everyone, really.
I agree. This just not a diversion from what we need. Now let's get to Pot Inc. Now this is a fascinating. Your involvement in this business is fascinating to me. I wrote a little bit about it recently in the New York Post. Listen, you're a longtime short seller. I mean, that's what you did. I know you as a guy that bared down on these companies. There's a story about you sleeping in an alley somewhere, from what I remember, to try to check out some company whether it was a fraud or not. I mean, you're that type of guy. And we're gonna.
I've been a dumpster diver in my day.
Right, which is
that's
great.
What you have to do. That's what you do.
And that's where, not only do you read balance sheets, but you actually do the legwork. I'm going to get into short selling later on, but I want to get right into I want to hit the bong, as they say, right up the top. What made you get into Pot Inc.? Because this, I mean,
well, it's a fascinating thing. As you know, I had a horrific shoulder injury 3 years ago, 3+ years ago. A horse actually ran into me. I broke my arm at the top, and my shoulder was fractured. So I have 9 screws and 2 plates, and the only thing that really worked for pain, because I wouldn't take oxy, I took no pain relief, no pain medicine, was sort of the bomb that went on my shoulder. And I started, looking into this space, and it was completely out of favor, and it's still out of favor. But it is a $50 billion U.S. business.
And let's break it down. It's not just joints that we're talking and the physical.
Not joints. It's joints. It's gummies. It's cream. It's things like that, and they actually have healing powers.
Right. The cream is therapeutic mostly.
The cream is therapeutic, but also my ex-wife, bless her soul, her husband unfortunately has Parkinson's disease.
Yeah.
And he has it pretty bad. And he couldn't sleep. And he had the shakes, and he was nauseous.
Oh, I know.
So the only company that in my mind is investable is Glass House Brands. They make a very souped up gummy. So I bought a bunch of gummies for him, in California, and he takes the gummies every day and every night, and it's cured him of the shakes, and it now makes him sleep better. So whether the cream works on my shoulder or the gummy works for someone with Parkinson's, it has major healing effects.
Now, disclose your position in Glass House. Are you an owner? Are you a?
I own an awful lot of the stock. I have money where my mouth is. I own millions. I own millions of shares. And the stock is give or take $6 a share. My son owns quite a bit of shares as well, and I think it's a generational investment for reasons we'll get into. But pot, is not necessarily for stoners. It has huge therapeutic value. And, Glass House, for example, just signed a deal with University of California at Berkeley, develop hemp strains for medicinal purposes. But the fascinating thing is I'm not old enough to have lived through prohibition once with booze, but I saw prohibition with gambling as did you, where 20 years ago, sports betting was really only done in Vegas and through your bookie, AKA the mob. And if you didn't pay the bookie, they'd break your arm or legs or smash your car window or something like that. But it was very underground. But over time, through the government and sports leagues, we now have DraftKings and we have FanDuel, and sports gambling is now everywhere. And it's legalized, and the mob or the underground is out of gambling, because if you want to gamble, you now have a DraftKings account or a FanDuel account. You can do it on your TV, laptop, computer, whatever. And hell, 30 years ago or 40 years ago, Paul Hornung and Alex Karras were suspended from the NFL.
I remember that.
For associating with gamblers.
Right.
LeBron, mid-season, is now doing commercials for DraftKings. So we've come a long way with gambling, and I think this is where cannabis is going. And
you point out that Alex Karras and Paul Hornung. Paul Hornung is one of the greatest running backs of all time. Alex Karras was a damn good defensive.
They're both Hall of Famers.
Oh, and Alex Karras is too. But yes.
Yeah, okay. and they were both suspended for associating with gamblers. So you fast forward today, where either cannabis or hemp, I think, is legal in 41 of the 50 states. But federally, it's still Schedule 1 or illegal. And the 500,000 people who are employed in the industry can't even bank. They can't even bank with a real bank. So I've talked to Treasury about this. They actually reached out to me about Canada and all the money laundering and the shit that goes on up there. And I mentioned safe banking for cannabis is a must. And it's a must because you should have legitimate people being able to bank, and it screens out illicit. And I think what the government is figuring it out, and I've also had conversations as recently as today with Homeland Security, is if Trump wants to be strong on the border and Trump wants to be against the cartels in the CCP, what you do is you make cannabis and hemp legal, you make it a states' rights event, and you heavily test, you track, you trace, and you have banking. And by design, if you can't pass tracking, testing, and safe banking, by design, you're illicit. And then you should have all your cash, all your assets, and everything seized, and you should be deported. That should really be the job of ICE and Homeland Security, to crack down on the illegal cartels, which are Mexico or South America, and a lot of it coming through Canada. So the more you make it acceptable with rules, if people don't like smoking outside, put no smoking within 300 feet of a building. If the government wants, tax the living hell out of it, like they do with booze, like they do with cigarettes, like they do with chewing tobacco. Tax it all and let the money go to cracking down on what President Trump wants, which is keeping out, illegals, cartels, people like that who create crime. So if you want tighter border security and you want tighter law enforcement, don't reward the illicit cannabis hemp guys by making it harder for the legal people to operate.
Let me raise this issue with you, because I'm, I know people. You're not a stoner, so I mean,
No, I'm not.
I mean, do you smoke it, by the way?
No, I don't.
Okay, so
I don't. I mean, I do from time to time, but it doesn't have an effect on me as it does on others.
Right.
And
so
again, I'm not a drinker. I don't chew tobacco. I mean, I have no problem with people who drink a lot. I have no problem.
No. And by the way, alcohol could be a deadly substance. But here's where I get pushback when I talk about this to, mom and dads about their kids, because I know somebody that had a kid that was literally addicted to pot. And the pot, when I was a kid, you smoked a joint, you went out, you ate 2 pizzas, and you went to bed. It was not potent. I mean, you were high and you were tired, and and trust me, I wasn't like a stoner, but I just remember we used to go out, smoke a joint, me and my friends, eat a calzone, and then we were too tired to do anything, so we went to bed. The pot now is very potent. It's almost an hallucinogenic effect on kids, and by normalizing this, we're maybe mainlining a drug to them that they should not be involved in. What do you say to that?
Well, it's very simple. First of all, I had a friend whose high school kid smoked a joint at a party and was laced with fentanyl, and he died.
Yeah.
Kids with booze, with beer, right? There's a reason it's over 21. Right. And it's just like kids walking into a liquor store and buying a 5th of Jack Daniels. By all means, everyone should be ID'd. And by all means, everything should be tested. Right. But that becomes a point of sale issue, no different than booze, smokes, chewing tobacco, the whole thing. You're not supposed to smoke cigarettes under 21 too. So that's a point of sale thing. I mean, kids aren't supposed to go into casinos. I mean, if you're under 21 and you look under 21 and you walk into a casino, they don't let you go in. Now, every dispensary I've ever been around, they're strict ID testing, and they're not allowed in there. But see, this gets back to illicit. The kids are getting the stuff from illegal sellers of the thing. And if it's no different than buying bathtub gin. Before when there was prohibition there, people used to buy that shit and they'd go blind.
Yeah.
So my point is, if you test it, if you track it, if you trace it, and you ID people and you tax the living hell out of it if you want, right? You can regulate THC levels. If it's too strong, just say, here's the warning of the THC. This can cause you to be whatever. But the point is, you can't turn back what's already a $50 billion industry. You can't turn back.
Donald Trump is a famously a teetotaler or
Yeah.
Maybe a glass of wine. He owns a winery, so maybe he tastes a little bit of his wine every now and then, but he doesn't drink. I'm pretty sure he doesn't smoke pot. How is the Trump administration open to your arguments, or what do you expect them to do?
I think Trump is going to say it's a states' right deal. These businesses should be banked. They should be regulated. They should be taxed. His buddy Joe Rogan is a huge advocate of it. Tyson's a huge advocate of it. It's huge for pain relief. It's helped me amazingly with my arm, and it's worked really well for my friend's Parkinson's disease. It's worked well for vets. So the trick is that and this is the key, and this is what I speak to the government about. By making it harder for the legal participants, you make it easier for the cartels and the illicit, right? If you make it illegal, people are still going to smoke it, chew it in gummies. They're going to do it, whatever, but they're going to reward the cartels. They're going to reward the exact people who Trump wants to keep out of this country. It's going to reward the exact people ICE and Homeland Security is trying to crack back on.
Okay, so let's game plan this a little bit. You've made that point very well, and Todd Harrison is another former guy that was in the business. Todd. Todd has made that point to me for the last, I would say, 4 years. But we're still at square one. Is there any timeline on when you might be able to? I mean, it has to be an act of Congress, I'm assuming, right?
Well, no, it can come in a lot of ways. It can come through Treasury with safe banking. It could come through Homeland Security. It could come through executive order. Timing is a lot of it. But I think where people are having an aha moment, and this is like really important, if people leave this with nothing else, you can't turn back a $50 billion or $100 billion business. You can't turn it back. If you make it illegal in Texas, people will just buy it from the cartels, which is the last thing President Trump wants.
Right. But do you think he does an executive order after the budget is passed?
Look, we're in, Charlie, an anything goes time. Okay, we're in an anything goes. If someone would have said on Thursday, whatever day today is, June 5th, Musk and Trump will get in a pissing match, you can't predict anything. What this is, what the business I'm in, I try to think things through. I mean, I'm a ready, aim, fire kind of guy. And I'm thinking, in a prohibition time, what was the dam breaker on gambling with the mob to online gambling? What was the change? The change was the leagues were incented to allow gambling. It used to be you had no sports teams in Las Vegas. Now Vegas is going to have all the sports teams, right? They got hockey, basketball, baseball, they got the Raiders, they got the WNBA, right? Because they were worried about gambling. This industry is here to stay. There is no turning it back. So since it's here, why don't we make it safe? Why don't we make it?
But legislatively, Mark, or just real world, real politic, do you see an opening with the Trump administration as opposed to what was going on during the Biden years? You would think the opposite, that Biden is more progressive. He might like it better. But you see,
I'll tell you why I think this is going to happen. I think it's going to happen with Trump is because you're going to have midterms, and safe banking is a real thing. And there's 500,000 people employed in this industry. And if they get banked, they become huge fans of President Trump, and they become huge fans of the industry. 70% of the population want this. It's a popular thing. And the president and the administration, and I know this firsthand, they want wins. They don't want losses. They want wins. And this is a very easy and popular win. And it generates revenue for state governments. It can generate revenue for the federal government. And more importantly, is it cracks down on the cartels and, you know, the CCP, who the president wants to crack down on. He wants border security.
Do Republicans in Congress share that view?
I don't know. You know, I'm not a political guy, but people of some very serious outfits have reached out to me on how to make this happen. So I think it's going to happen, and I'm in the very minority here. It's a differing view. And if I'm right,
I don't know if you're in the minority, to be honest with you.
Well, I'm in the minority as it relates to the stocks.
Okay.
And I really think there are very few winners, but I think the one winner, and again, I own a lot of it, is this Glasshouse Brands.
Now, why do you like about that so much? What's their differential?
Well, what happened was someone who worked for me when I was in the hedge fund business, Russell Lyon, he's now at a firm called Park West. He told me about this idea about the company, and I thought he was out of his mind. Then I started researching it, and they grow cannabis for $105 a pound, and the next closest guy is somewhere near 400. They have the highest quality product out there. They beat numbers in the fourth quarter. They beat numbers and raised in the first quarter, and they have the mousetrap. They're the world's largest cultivator of cannabis.
But why is it down year to date? 6.5%, almost 6.5% down. Even
I don't know. I mean, the index, the MSOS, is down 35%. Okay. So the fact that it's
any reason for that? Is it because of the lack of movement on the on debanking or fair banking?
I don't know. I mean, again, we're in a market that one day it's this, the next day it's this. Where in one day you got tariffs, next day you don't have tariffs. My view, I think the stock's a $60 to $70 stock. Do you know Porter Collins and Vinnie Daniel? Do you know that crew?
No, I don't.
Well, Porter is of the Big Short fame.
Okay.
I mean, he thinks in the out year these guys can earn $3 a share. If they earn $3 a share, it's not going to be a $6 stock. It'll be closer to a $60 stock because they have huge leverage in pricing, and they have huge leverage when this thing becomes federally legal and you can buy California cannabis in Missouri and New York and New Jersey and Florida and Tennessee. Their margins go through the absolute roof.
We should point out that they've had losses for the last year, right, or something like that.
Oh, they're generating, from a cash basis, they're generating cash.
Okay.
I mean, they're making money on a cash basis. How companies, I look at on a cash basis, these guys are generating cash, and they had a good quarter in a very tough industry. I mean, sales in California in the last quarter were down 15%. These guys in their company-owned pharmacies were up 15, or they're up 12.
Yeah, I mean, their EBITDA is up.
Yeah, I mean, they're outperforming the space. They're outperforming the industry, and it's incredibly well run. And I went down there, and I put together the Cal Berkeley Glasshouse deal. And Cal Berkeley is a real, accredited institution, and they take farming and things like that very seriously.
And what are they doing with Cal Berkeley?
Well, they have a hemp development program with Cal Berkeley for, amongst other things,
okay,
medicinal purposes, because more research can be done on this, products can be had, and there's medicine and healing and pain relief properties in this that are all natural. It's not from a plant. So I would much rather treat my shoulder with their balm and their cream than take Oxy. I mean, I had prescriptions for Oxy up and down, and I was in great pain. But this stuff works, and it works for my wife's husband who has Parkinson's. I know firsthand it works. I mean, I see the man, and he couldn't gain weight until he took it, and now he's gaining weight, and he looks much better.
And he at least gets a decent night's sleep as well, which is.
And he has a decent night's sleep.
Trust me, my father had Parkinson's disease. What people don't realize, people with Parkinson's disease, they can't sleep. They dream. They have these wild dreams in the middle of the night, and it just kills them.
It's bad, and people should, it helps veterans who have PTSD. So there's all sorts of reasons for this. The reason I think Trump and the administration are going to do this, amongst other things, is you need to crack back on illicit. What you don't want is your kid or your grandkid or your friend's kid going to a party in high school, smoking a joint that's laced with fentanyl because he bought the bullshit on the street because it was cheap, and you end up dead.
All right.
Okay, it's the same thing about drinking illicit, bathtub gin. People used to drink bathtub gin and go blind or die. Then you now have liquor that has an alcohol stamp on it. It's taxed. It's not for everybody, but they sure don't let 16-year-olds walk into the BevMo and buy a fifth of Jack Daniels and drink it on the street.
At least if they look 16 or if they don't have a fake ID. No, I get exactly what you're saying. It's a great point. I want to pivot in our final minutes here, Mark, to short selling, because that's where you made your bones as one of the best. You've had your ups, your downs, mostly ups, as every short seller does. Tell me about the short selling business. Is it done? Is it?
I was at a virtual conference earlier today, and to do this with you, they moved me up. Short selling as an industry and a career is over. It's done. It's finished. It's kaput. The gatekeepers and the agencies have been dismantled. So, I said at the time my last short was B. Riley. That's when the stock was 40. It's now under 3.
Oh, I know. You called. I mean, why would you say it's over? You made a lot of money on that, didn't you?
Well, that's fine and that's well and good, but I'm realistic with myself. I'm going to be 65 in a week, and I enjoy my life, and I want to be productive, and I'm going to be productive with Glass House and cannabis. It's too dangerous to be short. I've had the DOJ or the FBI knock on my door on the mimetics thing. I didn't like it. I sued the DOJ and the FBI, and I won. And then they appealed, and I won. And then I sued them for fees and won. And they appealed, and I won. So it took 6 years out of my life. And the CEO who ginned this up ended up going to prison. And I don't need to spend my life, in an unproductive, dangerous way when all the regulatory agencies have been dismantled. And it's too much risk. I'd rather try to.
And you're not alone in this assessment, I'm assuming, right?
Well, I mean, the industry. I mean, there's the two best short sellers I know of right now. The best who do it professionally are James Gibson, and he's Aurelius on Twitter, and Nate Kopakar. And both of them have come to me and said, "What should we do? How did you do this for as long as you did?" And I just said, until things change, it's not worth it, because CoreWeave tries to go public at 50. They have no demand at 50. They bring it at 45. The first trade's at 42, and 6 weeks later the stock's 170. You can't fight anything like that because you don't know the flows. You have a tariff deal one day, you don't have a tariff deal the next day. So the volatility combined with the lack of government enforcement and so much money involved in wanting things to go up, it's a very hard fight to fight. And I only like playing games in general where I know the rules.
Right. And we should point out there are a lot less publicly traded stocks today as there were in the past. We have the rise of passive investing, which automatically puts a floor on a lot of these things, even some of these companies that aren't very good. So it is it's a rough business right
Yeah,
now.
it's a rough business. It's a volatile business. It's a dangerous business. And I would rather spend my time while I still have my marbles, helping out Glasshouse and trying to make a difference. I mean, if what happens is right in cannabis, everyone who has Parkinson's will have access to Glasshouse gummies or Glasshouse joint, right? And it doesn't hurt anyone. It doesn't hurt anyone. No one's died from smoking a joint or chewing gummies. You can't say that with booze. You can't say that with cigarettes and lung cancer. And the time has come. The time has come that it's big enough, and illicit is big enough where the man in charge, President Trump, wants to crack down and border security, crack down on people shouldn't be here. Then you help the guys who do it legally, and you destroy the people who are doing it illegally.
Well, we're going to have to end it there. I'm getting the hook, Mark. I just want to point out that S3 or neither S3 nor myself, we don't have a position in Glasshouse Brands. We don't advocate it. We don't advocate pot, but we do bring on people who are part of this business who can help you make up your mind whether you like the stock, whether you like this as an investment. And Mark is one of those. And to me, a fascinating story because he's seen so much. Marc Cohodes, thank you so much. We got to do this again. One thing good, I told you this podcast would be perfect for you because you like talking, and we got you.
This is very, very timely. And I do think something's going to happen. I really do.
All right. Well, have you on when it does. Thanks, Mark.
Okay. Thanks for having me, Charlie. That was a lot of fun.
Ladies and gentlemen, signing off, Charlie Gasparino for Risk and Return. See you next week.